joining us now from London are Sanjay, Suri and Sri Jegarajah. Sanjay, let me come to you first. More than 6 hours of polling has been completed. What are you picking up? In which direction is the wind blowing?
Well, at the moment, it's very difficult to say which direction the wind is blowing because that is to ask which way people are voting. But clearly, we have a turnout that is so far not as huge as anticipated. It does appear that a lot of the world, and this is hardly surprising, is a lot more excited about Britain than Britain is about itself, because there would be a very significant number of people who do not vote running into many millions. But polling will close at 10 p.m. local time tonight. It is expected to pick up in the last hour or so. And we'll have to, of course, wait for the results, which should follow very soon after that, because counting will begin at 10 and we should have results through the night and a fairly clear trend by the morning. So the trends are very difficult to anchor into any sort of certainty at the moment. Polls themselves have been divided. Polls of polls have been divided. We just have to wait for Friday morning.
No, Sanjay, what I meant by which way the wind is blowing is, what are you smelling in the wind? Was there some panic towards yesterday close or early today, which gave people the feeling that, you know, the known devil is better? Is there anything like that, or was there a defiance, wanting to go afresh, a new page?
Well, the one indicator of that, beyond any anecdotal exchanges or expressions, is the market. What we have seen is that at a stage when the Leave camp was to the fore in the opinion polls, the pound took a plummeting, the markets, dipped very significantly. Following that, the Remain camp seems to have picked up steam. The markets seem to have steadied. So clearly the markets, and if they are the ones who are trying to get a sense of what is happening, seem to have stabilized more when Remain looked more promising. Clearly among the markets, it is the Remain camp certainly that they seem to favor. They think that will bring prosperity and, more than that, stability in Britain and across Europe, and of course, needless to say, the markets beyond that. But on the day of the polling, arising from the polling itself, trends would be very difficult to fathom.
Absolutely. Let's actually take that point forward, Sri. You know, it's an overwhelmingly Remain rally that's playing out in global markets, both on the equity side, on the currency side, the manner in which the pound sterling has risen. How are you reading the picture and the fact that this rally is so unidirectional? Sri, if you could hear us, I
mean, this is clearly the voice of business.
Well, Sanjay, we were speaking to Sri. Sri, what is your view? This rally has been so unidirectional.
Okay, I'm sorry. No, I wasn't sure. Pardon me. I wasn't sure whether that question was directed at me. What I can tell you is that yes, we are seeing this whole story being played out through the prism of the currency markets. Right now, we are seeing some last-minute polls, opinion polls, and the Remain campaign does seem to have the edge. And we are seeing that feed into cable strength in sterling. So you're looking at levels around 149. 150, of course, is a major resistance level. So you're looking at the highs, the highest levels for sterling in 2016. Let's not forget the enormous amount of volatility that we have seen in sterling. It's really been reacting to the ebb and flow of these opinion polls over the past few months in the run-up to this critical day. And I just want to take you through the mechanics of this vote just very quickly. An estimated 46.5 million people are eligible to vote today. That is a record number for a UK poll. As you know, the polls have opened earlier on this morning at 7 o'clock in the morning, and voting is underway. We are in the thick of it, and they will close at 10 p.m. local time this evening. The Electoral Commission here estimates that the final result will be published at around breakfast time on Friday. Back to you.
All right, Sri, thank you so much for taking us through what the market is making of this critical vote at this juncture. Well, let's take that discussion forward with Mr. Panda of HDFC Bank, and we also have Robert Parker of Credit Suisse joining in. Mr. Panda, some initial thoughts from you, particularly, how the currency market is going in with an absolute Br'exit bent of mind, an over 1% move on the pound sterling itself, and huge calls. The Brexit call is talking about a level of 130 in one of our polls. The Brita'in call is saying maybe 155 is a possibility. How do you see currencies playing out, whichever way the vote goes?
No, we must understand that this is a very important landmark in the history of currency markets. And in fact, in financial markets, if you ask me, this is something like what we have seen in Y2K and so on and so forth. A lot of events had happened. And this has kept us on tenterhooks for quite some time. Now, coming back to the issue of Britain remaining in European Union or exiting out of it, I think voters have to decide and will come to know tomorrow only. But as my predecessor said, most of the markets, including me, we are saying that probably Britain is going to remain inside the EU. Okay. In case the results show that it is adverse to what the entire market believes, you will see a huge movement in both currencies as well as in other stock markets, including...
Is that going to be a knee-jerk movement, or is it going to be a more longer-term change in the manner in which the pound sterling, let's say, is pegged not just to the dollar, but of course to the rupee and several other world currencies?
See, it will start with a knee-jerk reaction. Obviously, pound will be completely battered. It will then spread to Europe, and it will spread to us also. So that will be a long-term, long drawn-out game. And even if they, vote for exit, European Union, you cannot exit tomorrow, right? Like you have to go through, a process which will take at least a couple of years before they can exit. So there can be a soft exit, there can be a hard exit. Most possibly, if there is exit poll, most possibly after negotiations, you could go for a soft exit. So in that case also, pound will suffer. However, long-term impact will not be as hard as, you are saying, say, 130 or 135. I don't think that it is going to go there.
Okay, just coming to you in a minute, Mr. Panda. We're also being joined by Mr. Robert Parker of Credit Suisse. Mr. Parker, thanks for joining. Do you think the vote still can go either way?
I think it's very confusing. If you look at the opinion polls, we have had a number of opinion polls over the last few days suggesting that the UK will vote to stay in the EU, but conversely, we have some opinion polls which show the opposite decision. So the opinion polls, frankly, are not giving much guidance, with two exceptions. And those two exceptions are, firstly, that the turnout looks as though it will be very high. And I think a high turnout will probably favour the Remain camp. I think the second point is that the number of people who still have not made up their minds is very high. And there was an opinion poll, for example, this week, which suggested that over 10% of voters still have not made up their minds. And I assume that they will make up their minds rather quickly. So that's really the only guidance from the opinion polls. I think if you look at what is more and more interesting indicator, which is the money which is being placed with the betting companies, and there we've seen quite a lot of volatility this week. At the end of last week, at one stage there was a 40% probability that we would vote to leave. That probability has come in quite significantly in recent days, and currently it only shows actually about a 20% probability of us leaving, voting to leave. So I think the betting odds are probably a better indicator, and they have shown quite a significant shift in recent days.
Okay, Mr. Parker, please stay on with us. Jegarajah, I know you have to go away and do some more reporting. So one final question to you. What are you picking up from your reporting team and your colleagues in other parts of Europe? Do you think really peace comes to the financial markets even if it is a Remain vote? I mean, the Danes, the Dutch, and the general, centrifugal tendencies we are seeing in Europe, do you think they will once again start impacting financial markets?
I think there are a couple of points there. I don't think that the dust necessarily settles, even if it is just a Remain vote. I think that there are forces at work in Europe, political forces, separatist forces, if I can use that word. If you look at Spain, there's the Catalan tendency, etc. So I don't think that this matter has really been fully laid to rest in terms of Euroscepticism, and that's going to continue to have arguably something of a corrosive impact on politics in the region. I just wanted to stress test what could be the worst case scenario, and that is a exit vote. That is a vote to leave, for Britain to leave the European Union, and the impact that it will have on emerging markets. Because being based in Singapore, coming out here, it's just interesting just to road test that worst case scenario. I think there's a difference between the short and the long term. In the short term, you would see a wave of selling in risk assets that could infect Indian assets as well, and it would be in the initial phase fairly indiscriminate, and the negative feedback loop would be through the currency markets. So watch the US dollar, watch the flows into the US dollar and how that affects the dollar rupee cross. So that reaction will be quite critical. The other issue here is, and you can see these contingency planning being borne out with the central banks globally across the world in the run-up to this vote, liquidity conditions, financial markets, financial conditions. What happens there? Does liquidity dry up? And I know that the RBI in your neck of the woods has been making some assurances on that front. And I think India broadly, from a balance of payments perspective, is in a better position to absorb any external shocks should it come to a scenario if we do have a Remain outcome, and if the voting does point that way come Friday. I think the big unknown here, and it'd be interesting to know what your view on this is, Rajan's departure as governor of the RBI come September when he returns to academia. If that worst case scenario does eventuate, it will be very, very ill-timed, I think, for India if Britain does choose to leave the EU. If it is that outcome, that would be a big, big test for his successor at the RBI.
Okay, don't we know about that? Thank you very much, Sri Jegarajah, for joining us. Let me get one more question in with Mr. Parker. Mr. Parker, let's speak scenarios, since we don't really know how the count is going to materialize by end of day. One, if it is Remain, which seems to be the base case of the betting companies, do you see the euro as well rallying? And the pound, of course, will rally. Do you see a significant improvement in risk appetite? And therefore, do you think equities all around the world will see a huge rush of adrenaline even from here on?
I think it's easier to answer that question with respect to equities and bond markets. I think bond markets, as investors move more into a risk-on position, I think we will see government bond yields rise, and over the next week or two they might rise by, if one looks at bunds and one looks at gilt yields, 10 years, I think they could easily rise by 20 basis points over the next 2 to 3 weeks. Likewise, I think equity markets probably have some upside. But given the rally that we have had since the early February, despite a rather poor May, I think the upside is probably of the order of 5 to 10% over the next 1 month to 6 weeks. I think what's more difficult is actually on the currencies. Yes, sterling has some upside, and I would forecast that sterling moves back over the next week on a Remain vote to between 150 and possibly 152. On the euro, we do face a number of headwinds, however. We have a Spanish election coming up, and that could have a very messy result. And I think that investors are concerned about other political developments in Europe, such as Italy, where Five Star, which is an anti-EU party, has now gained significantly in local elections in Rome and Turin. So the European political framework still remains very difficult.
Okay, so Mr. Parker, just to come back to Britain, if it indeed is a leave vote, then is there going to be a lot of chaos in global financial markets? Is that going to be short-lived chaos, or could it have really long-term repercussions then?
I wouldn't actually put it that way because, with the Lehman Brothers crisis that we had in September 2008, that obviously was a crisis in the banking system. And, if we do vote to leave, this is not going to be a banking crisis. It is going to be, I think, a severe problem on trade and capital flows. And, let's not forget that the UK has a current account deficit of 4% of GDP. That needs foreign capital to finance it. The UK has been extremely successful in attracting foreign investment, not just in the real estate market, but also in real activity, notably the auto sector, where the UK auto sector is now a major exporter, but the UK auto sector is dominated by Japanese and German investment, and I think that foreign capital flows into the UK will slow, which is a long-term problem. In the short term, I think we will see quite a lot of shorting of the pound, and I think there is going to be quite significant downside risk on a leave vote.
But could you find ripples across, distant financial markets like ours, for instance? Could you see the Sensex fall, say, 5% if there was this surprise leave vote?
I would say that the Sensex is much less sensitive to a Brexit leave vote than, say, European markets. And I would actually say that on the event of a leave vote, downside risk in the Sensex is probably limited to 5%. So I think emerging markets, including India, there isn't really that contagion risk from a leave vote. Europe, it's a different question. And, we had a very good report from the IMF last week analysing the downside economic risks to other European economies from a leave vote. And clearly there, we're going to have the same sort of downside that we would have in the UK equity market.
Okay, well, let me now toss that question to you, Mr. Panda. What are the goalposts for the rupee? I mean, if it appreciates, how much can it appreciate because it is a Remain vote? If it is a Leave vote, Mr. Parker says that the Sensex is at worst going to get impacted 5%. So how much does the rupee weaken to? 68 or not even that?
No, we need to see. Our fundamentals have improved. So on BOP, we are expecting a kind of $10 billion positive on the BOP side. So on that side, we are safe. We are in safe hands in terms of volatility during Rajan era, and I think post-Rajan era as well. So those things are taken care of. Now, fundamentally and technically, rupee can go down to, and dollar rupee pair can go down to 66.80 or thereabout on the downside if Remain vote comes, which is the positive side of it. The negative side of it is that if Britain exits, as I said, it will be a long-run affair. So maybe on sentiment side, we will open quite high tomorrow if that happens. So maybe 60 paisa or 70 paisa kind of gap. But I don't think dollar rupee going beyond, say, 68 or 68.20 in the near term. Obviously, that also includes my view that mostly it will be evening out over a period of time. So I don't see much, in terms of going towards 68, 80 or 69 in a very short period of time.
So just a quick corollary to that. In case at 11:30 our time tomorrow, there is an exit vote, which is not the scenario that the market is factoring in. Would you like the RBI to come and use its firepower to defend a certain level? If yes, what's that level?
I think they don't come and defend.
They let market forces pretty much settle. Yeah.
They let market forces come. What they will probably do, and what they have been doing in the past, is that they will, even out the volatilities. And they will not let fear come to the minds of, say, importers who will come and take irrational calls.
Start shorting.
So that's something I think RBI will definitely do. And I'm very sure that it will be and well taken care of with the kind of
So the Indian rupee is the least of your problems.
right now I don't see much of a problem there, in fact.
All right. Thank you very much, Mr. Panda, for joining us. Well, that seems to be the general view of both Mr. Parker and Mr. Panda. Thank you very much, Mr. Parker, as well, for joining us. Sanjay, Suri, we'll have just one more word with you. Do stay on.